Saudi Aramco has completed the biggest share sale of all time. Its much-awaited IPO raised $25.6 billion for just 1.5% of the Saudi oil producer. That values the company at a total of $1.7 trillion. It's short of Crown Prince Mohammed bin Salman's target of $2 trillion, but nevertheless confirms Aramco as the most valuable company in the world. The share sale mainly relied on domestic and regional investors after there was limited interest from further afield. Well, on that, let's bring in DW's Ashutosh Pandey. We can understand a bit more about this. So $25.6 billion seems like an enormous amount of money. Is it in this context?
Well, not really if you ask the Saudi prince. He was definitely expecting to raise $100 billion from this offering. Now it's just a quarter of that. And the valuation, as you mentioned, $2 trillion, it's 1.7 trillion. So definitely he wouldn't be a very happy man. But if you ask the global traders, they would say that it's overpriced. They are pegging the valuation anywhere between 1.3 to 1.5 trillion dollars. So they definitely feel that the share is overpriced at this point of time. They are citing reasons such as security concerns, especially after that attack on Aramco facilities in September, and geopolitics in the region, which is uncertain, and also the fact that the bleak future for oil going forward.
Trading of the shares, though, it doesn't start immediately, which is a little bit unusual. It's going to start later this month. What can we expect from day one of trading?
Rob, it's difficult to say, though, but the Saudi authorities are definitely making all efforts to ensure that it's a blockbuster debut. They're offering bonus shares to retail investors who are willing to hold on to the share for more than 6 months. That's definitely a great incentive. But as I mentioned, global traders feel that the shares are overpriced, and they do not actually expect really a blockbuster debut at this point of time. But you never know with these companies which are seen as national champions. Everybody wants a pie of that. So probably that could change the dynamics a little.
Ashutosh, stick with us because there's some other big oil news today. The OPEC oil cartel has agreed to cut production, but only by 500,000 barrels a day. That's the equivalent of 0.5% of global output. Members of the Organisation of the Petroleum Exporting Countries, along with Russia, agreed to the modest cut at a meeting in Vienna. Their aim is to boost prices as the global economy slows down. The move is also an attempt to compensate for higher output from the United States and other producers outside of the cartel. Let's go back to Ashutosh on this. So what are we expecting from this cut? Is it going to make a difference?
Rob, it's anything but a done deal at this point of time. It's still to be decided how the cuts are going to be distributed among those OPEC plus countries. But let's for now assume that the deal is reached and the further cuts come in place. That's not going to have much impact on the supply. Remember, the OPEC plus countries are already over-complying with the targets that they last set for themselves, 1.2 million barrels of oil per day. They're actually producing much less than what they're supposed to, driven mainly by Saudi Arabia. So as far as supply is concerned, that's not going to have much impact. In fact, the 500,000 barrels per day cut is only going to formalize what they've been doing so far. And as far as the oil prices are concerned, experts don't expect much there either, because at this point of time, it's not so much about supply issues. It's more to do with demand, especially at a time when the economy is slowing down because of the global trade wars. The oil prices are not going to change much. I mean, if you see, the oil prices have been reacting more to favorable news coming from discussions between US and China rather than the OPEC meeting.
Thank you very much. DW's Ashutosh Pandey.